Good afternoon, friends, and welcome. I'm going to share my live trades and results with you, and together we're going to evaluate how good or bad these trades end up working out. This is only my journey and evaluation of trades. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Here's what we'll be doing. I'll be using real money and live trading and tracking of performance. We'll be using the symbol SSO, which trades approximately 2 times the daily movement of the S&P 500. We'll be benchmarking against the S&P 500 and SSO in a buy and hold scenario. These trading and evaluations will be done at the end of each day. To track these trades, I'll be using a custom spreadsheet and charts. What's being tracked may change based on your comments and feedback. Let me know in the comments what you think will improve the tracking of performance, and hopefully we'll be going in the right way. To help me with the YouTube algorithm, please remember to like, subscribe, and hit the notification bell. And with that, let's get into it. It is Thursday, January 19th, 2023, and the markets have been going crazy. I mentioned yesterday there was a big drawdown or a big drop in the market yesterday. That continued, a big gap down, and then continued sort of to stay in the red zone for the rest of the day. And what we're going to be doing today is actually exiting the position, and we will see how we're doing. This is going to be a tough trade because we had some significant gains as of 2 days ago, up maybe 6-7%, but I think we're going to be significantly less than that. So give me a minute, and we're going to execute the trade and close out, and then we'll get to the performance tracking. All right, you can see the orders in. It'll take a minute and execute. You can see the blue line there showing a slight positive gain. All right, let's get into the tracking. I'm going to start off by showing you 2 charts. The first one that we're going to take a look at is the chart that I'm going to use to track the performance of each trade. You can see that up on the screen right now. And I left the formula bar visible so you can see the entry and exit price. This is a pretty typical way to calculate percentage return. I like it better than the typical starting and ending divided by the starting. This applies a little mathematics to just doing a simpler formula, and it doesn't matter if it's a positive or negative return. If you put them in the right order, you get the right answer. So on this particular trade, as I mentioned, it's the 19th. It was the close of the market. And this particular trade generated 0.7%. So not off to a great start, especially since we had a significant gain and then a big pullback. That was unfortunate, but sometimes that's the way it is. The second chart I want to show you is how I want to track month to month. And this one, I'm going to track both percentage gains each month, but on top of that, also, if you were to have any kind of an amount of money, let's say it's $1,000 in this case, how would it grow over time? So I started this in 2021 for the purpose of this channel. My history goes back many more years, but just for this channel, I wanted to show one really good year, and then, of course, 2022, the not so good year. And as you can see, based on the returns, we're seeing that 100,000 is now 138,000. We certainly saw something of 40-some% the first year, and last year I think drawdown of 5 or 6, if I remember correctly. The other thing I do want to mention that these returns are compounded, so each month's gains roll into the next month's investment amount. So it might be a little bit different than average. If someone were going to try and reduce some risk even on this method, one way to do it is just trade the same amount of shares each month and not roll in gains or losses into the next month. But in terms of trying to accumulate some amount of principal, I think this is the best approach. So you can see that's the methods we're tracking. I'm really curious to see the comments and feedback as to what you think of these methods and whether you think showing a compounded rate of return versus an average rate of return, or a cumulative rate of return, what folks might be interested in. I'd also be curious if people want more information on how these are calculated or why I'm using
compounded rates of returns, some of the pros and cons, just let me know. Happy to make adjustments.
Are we in the right way? How do you think we're doing? Please comment below on what you think. Is this working out? How does it compare to other things you've seen? And of course, how can we track these trades even better? And remember two things. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. And don't forget to like, subscribe, and hit the notification bell. Until next time.